is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to take a look at the German DAX just like we always do. As you can see this morning, we have a potential on this 4-hour chart of making a double top up in this area. It looks very interesting, if nothing else. Pay attention to it. It's in the news because they're talking about putting tariffs on the famous German cars, such as the, something has happened. I don't know if I'm coming through or not, folks. I'm seeing something flashing on my computer. Broadsword to Danny Boy. Broadsword to Danny Boy. Come in, Danny Boy. Okay, it's all right. The eagle has landed. The chicken is in the pot. We're okay. I don't know what happened, but the old Toshiba was flashing lights. I don't know what that means, making wild sounds. All right, let's take a look at another one that we're watching closely, and that is the old FTSE, which is the British market, and it also is in the news. And if you'll take a quick look at this, you'll be able to see that it also is doing one of our favorite patterns. You notice we made that Gartley back there on January the 28th, and now we ran up to this level here with the ABCD. We also hit that 1.618 expansion, which is interesting. By the way, folks, we have Norman, he calls it to the minute. Winsky will be our guest today at the break, which is always a lot of fun. And I want to thank you, folks, for your feedback on Tim Bost's webinar that he gave yesterday. It was looked like it was very well received by everyone, at least that's what he told me starting out anyway. So we'll keep an eye on those as we go through. Last week, if you remember, we were talking about the Bitcoin, and I have a request on that. That's why we're bringing it up. I don't trade this, haven't, and I don't intend to, but we did make that ABCD Gartley down there at that 33.50 level, spot on, and then we had a pretty good rally. And look, we went sideways, for well over, 6 days, which is usually a very bullish sign when you're looking at something that has made a bottom like that. There's no selling coming in. But if you take a look what's happened to Bitcoin here over the last day or so, we have had a continuation of that up move, and we got all the way up to 39.50. That's 600 points. That's a 20% move off of that Gartley there. So, but right now where we're sitting there, 39.50 is a 61% retracement in Bitcoin. We need it to get above 4,000 and then maybe get some play in some of these cryptocurrencies again. That's what it looks like. But we'll see. I bring this to your attention because these patterns work anytime there's a lot of people trading them. And believe me, a lot of people trade these cryptocurrencies, online and different, these silly, not silly, these strange exchanges that they have. Well, they're not listed anywhere, of course, but a lot of people, Mr. Z, if you go online to TradingView, you'll see a lot of trading going on. Well, some of these, you get a lot of volume when a stock's only 3 cents. Give me a break. Even I can buy 10 shares of that. But if you watch the volume over the weekend, starting on Friday all the way through Monday, you'll see big spikes as people are home at their computers trading these cryptocurrencies. But it's about blockchain. That's really the main thing that we're looking at. I want to share with you a pattern that we see not too often, but it's a very, very it's a really a cool pattern. But let's get this up here. This happens to be this is Boeing Airlines, folks. I wanted to show you here. You notice when we came down on the 25th, we made a slightly lower low than we did right at Thanksgiving weekend. That was an ABCD down, just absolutely perfectly. You can verify that by, you can see the 106 on the expansion and 94 on the retracement. You add those together, that's 2. That's a perfect ABCD right there. And also it's an ABCD from the September high down into the October 29th low, the rally up to the 61% retracement and then down again. So, and what we do, we went all the way up and made this expansion. You'll notice that we left a big gap here in early January when the news earnings came out. I guess a big jump up here. But the real key to this is if you'll bear with me here one more time, and we'll take a look at this on a longer term basis. We're going to look at it over the last 2 years, and you're going to see a very interesting pattern that we've talked about. And we've actually had Ed Carlson on from the Seattle Technicians Association talking about the work of George Lindsay. And his work, of course, encompassed 3 peaks in a domed house. And that's what you're seeing right here, folks. You're seeing the 3 peaks. The first one is in June. Second one is in September, late September, and the third one is coming in right now. The highs between those levels is nearly perfect, and you're making a 1.27 expansion with a straight up move without any correction since December the 26th. So this market is extremely oversold, and it is completing a major pattern in here known as 3 peaks in a domed house. Now, whether that means anything or not, I don't know. But remember, the Dow Jones Industrials is price weighted, and you'll never guess, boys and girls, what the highest price stock in the Dow Jones happens to be. Does anybody want to guess? It's a giant prize waiting for anyone that can make that guess. Slight hint. You just saw a picture of it in TFNN. Yes, it's Boeing Airlines at $417 a share. That's what it looks like. Whether it'll complete itself and have a correction from this level remains to be seen, but that's neither here nor there. One other thing I wanted to mention. Very good, David. You're going to, son of a gun, you're going to get the prize, buddy. We will take a minute here to talk about something else that we've mentioned several times over the times that we've been on the air here, and I think this is the one I want to see. No, that's not it. Hold on a second. I've got it here. This is the one. Hold on. And we want to look at this stock right here. Here's Netflix right here. All right. You're not going to get this thing anyplace else, so this is what I see right now. You'll notice here at Netflix, the key here is you see the Dow is down over 600 points on this day here in early January. I believe it was January 3rd. And Netflix was up, and up pretty substantially considering the Dow's down over 600. Look what happened when the Dow bottomed. You see the gap up and then the big run up. Now you'll notice here on Friday, Netflix made a higher high and then closed lower. That's not bullish action, folks. It closed lower. Now, here's where the real fun comes in. Jim Twentyman always said, defy human nature, do the work yourself. So why don't you go take a look at all the FANG stocks? Facebook, Amazon, Apple. We've already looked at Netflix and exactly Google. Do you know that all of those stocks closed lower Friday with the Dow up 440 points? Folks, these were the leaders of the pack. Do you realize that 25% of the value of the NASDAQ is based on those 4 stocks, Facebook, Apple, Google, and Amazon? That's just an incredible amount. You throw in Facebook, you're talking about, something a whole lot other. It's a big, and to me, that's a very bearish sign. But, like you say, sometimes you're right, sometimes you're wrong. But what we're going to do now is take a break and pay a few bills, and we'll have Norm Winsky on in about 15 minutes.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and we're going to take a quick look at one of these FANG stocks, the one that starts with the F. That's Facebook, and you'll notice here that this one is made a top 2 weeks ago. We hit the exact 78% level from the August high, which was a rally back of 382 after the huge gap down. Then you'll notice it had a slight gap up of about almost $20 a share. In fact, it was $20 a share, you know, back in early February when some kind of news came out. Everybody that's bought this stock, folks, over the last 2 weeks is now underwater. And when you can stop and think that we've been straight up in these markets and this one is underwater, that's a perfect example of people selling in the face of, you know, a very, very strong market. And that goes back to Jesse Livermore's, one of his favorite things is to sell the weakest and buy the strongest. And this is not the strongest. So this stock looks like it's, at least it's going to go down and fill that gap at 150. That's my 2 cents worth. Whether that's going to happen or not, I don't know, but that's what it looks like. It'll be pretty interesting to see if that is going to be the case. Now let's move on. Remember what I mentioned here, that all of those FANG stocks were down on Friday with the Dow up 440. That's a very, very important thing, to pay attention to. What Mr. Z's got a really great point up here from Mark Douglas's book that we probably ought to talk about, because I need to chat with a very, very dear friend today regarding one of his friends that's going through a little bit of a rough spot because he's making some really bad errors. But when they talk of the three fears, and remember, fear is from, an acronym from Tony Robbins, false evidence appearing real, because most of these things don't happen. But the fear of being wrong, you got to get used to that. You're going to be wrong a lot. Like we always say, you got to kiss a lot of frogs in the old pond before you find a princess. Number 2, fear of losing money. You're going to lose. That's just like breathing. Number 3, fear of missing out. You got to remember, it's much better to be out of a market wishing you were in than in a market wishing you were out. Just keep that in mind. And finally, the fourth one, the fear of leaving money on the table. Folks, that's a silly one too. And you know why? The only person that doesn't leave money on the table is the person that gets the absolute high tick on the short sale or the low tick on the buy side. Otherwise, everybody misses out of leaving money on the table. That's just a natural. So of those four fears, they're all natural. You're going to be wrong. You're going to lose money. You're going to miss out, and you're going to leave money on the table. So why worry about it? It's not a big deal. But people focus on that. The one things that they really don't focus on, and what they should do, is if you're in stocks that are going down, you should get out of those. Keep the ones that are going up. That's the real key. But what do? They buy more of the ones that are going down. They're adding to a losing position, which does two things. It breaks all financial guidelines for speculation. And one is you're adding to a losing position, and two, you're doubling your risk. So that's another thing that you shouldn't do wrong. We heard that in many, many books, of course, with Bernard Baruch's book, My Own Story, Reminiscences of a Stock Operator by Edwin Lefevre. Folks, anybody out there in radio land that is listening to this and has not read the book, Reminiscences of a Stock Operator by Edwin Lefevre, which is the story of Jesse Livermore, you are really doing yourself a disservice. That is a fabulous book. I have read the book at least 50 times, maybe even more. And it is just a spectacular book of some great stuff that was in it. So that's all I'm looking at. Okay, we'll see what happens. All right, let's move on to one other thing here we've got to cover, because we've got our good friend Mr. Norm Winski coming up here in just a little bit, and that is the German Bund. I want to bring this to your attention because we put up the long-term weekly chart on this, was completing a bearish Gartley up there at that 166 level. I just want you to see what's happened since the 7th of February, 10 days ago. You'll notice that we're up here. It appears that we're trying to make some type of a triple top in here. There's a possibility we might make a slightly higher high, but frankly, I don't know that we will or not, because that long-term weekly in the German bond is really very, very important. It's really important. When we were talking about fears before, we're still chatting about it here in the Tiger room here. And that is most of the fears that you think about they never come through. Think about when you were a little kid, fear of the dark. And I still, I never had a fear of heights until I got much older, and would define much older at a different time. But now I really don't like heights. I don't even like to, when I get up in a building that's more than 50 or 60 stories, I don't even like to look out the window. I don't know why it is, but it really does. And when I'm watching a movie where someone's walking along, the top of the building or something, I look away, because I really have become, afraid of heights. So I don't want to watch that. I'm not afraid of them, I guess, but yes, I am, because it makes me uncomfortable to look at it. So we'll see whether that moves on or not. Someone's. No, the boats and ships don't make any difference anymore. I'm not, that's a recipe for for being boats. I was on it. The reason why, I'll give you the bottom line here, the reason why I don't like boats and ships, I was on a ship to Puerto Vallarta, and I got caught in one of those Mexican typhoons in March many, many years ago, and everybody was sick. It was terrible. Anyway, that's neither here nor there. Okay, we'll move on to the next one we want to look at right now, and that is, we want to keep an eye on these bonds and stuff, because we do have a chance for the bonds to get up to this level here. You'll be able to see here we are in the here we are at the bonds over the past 2 months here. We've already made the 61% retracement twice. You'll see we made it in January. We made it in early February, and now we got a possibility of either making a triple top up here at 147.02 or going up to the 78% level at 147.26. But this is a Gartley pattern that is forming. It already made the first formation there at the 61% retracement and backed off. 2 handles the first time, a handle and a half the second time, and now it looks like we could be pushing up to 147.26. And if there's a top in the stock market this week with this new moon, let's try this again, with this full moon at perigee, then there's a possibility there might be a flight to quality here in the Treasury bonds, and we could get up there one more time. And, you know, we could even get higher than the 148.24 if it got really bad, I suppose. But when you're thinking of the Treasury bonds going back to that 170, folks, take a look at those long-term weekly charts before you do that. That's going to take something that is going to be Marshall, Marshall is saying the reason why I'm afraid of heights is because I'm bearish. Oh, that's a good one, Marshall. You're on your A game. That's good. Okay. Anyway, let's keep an eye on some of these things this morning because we're hitting some pretty good patterns up in here. We've talked about these before. I don't want to spend a lot of time with them, but the main one is this one right here. We'll bring up the New York Stock Exchange Index, and then we'll have Mr. Winsky on. You'll notice that we hit the 61% retracement in the NYSE on Friday, 877-927-6648. Stay tuned for the Wizard, Norm Winsky of AstroTrend.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have our good friend Norm Winsky from Astro Trends down in Naples, Florida on the line. Are you there, Norm?
Yes, sir, Larry. Good morning.
Good morning. I'm turning over the mic to you, my friend, so go right ahead.
All righty. So we got some big stuff going on today and tomorrow. But first, I'm gonna kind of combine the review and look ahead into a little combine them two. Usually, I'm on here several days in advance. Can't do that when you do that. But so anyway, you probably know we have a full moon at perigee that only occurs every 14 months. But before we get into that, I'm going to talk about this general time of the year every year. I roll out my different forecast models for the year. I call it Forecast for Fun Fest. February is my forecast for Fun Fest month. So there's a couple of different models I have. We have the January barometer. If you might have heard, as January goes, so goes the year. There's been statistical studies showing that this works since 1950, about 75% of the time. It says that if January closes higher, we should have an up year. If January closes down, we should have a down year. This year, January was a strong up month, so that indicates a bullish year for the stock market. Now, another indicator is the Super Bowl indicator, and this actually statistically, since it began back in, I think when they began the Super Bowl in '67, this has had a track record averaging over 80%, and it says that the NFL is divided into two conferences, and those are the champion of each conference meets in the Super Bowl, and whichever conference team wins, that indicates which way the market should close for the year. If the NFC team wins, that's bullish. If the AFC team wins, that's bearish. This year, now I have had a theory going. I think I mentioned this the last time I was on Larry's show, that because these two things both have a high batting average and are both predicting the same thing, and since we know what the January barometer is saying at the end of January, and the Super Bowl is played a week later, we should be able to predict who's going to win the Super Bowl. Well, I guess I got to apologize to your folks there, Larry, because I was wrong this year. I predicted that the Rams should win because we had the up month for January. So anyway, now we have the dilemma of we have mixed indicators. January barometer is bullish. Super Bowl is bearish with the New England Patriots winning. So I'm just going to take a wild guess now. This is just a pure guess because we have conflicting indications. Maybe we'll just get a sideways whipsaw type market for most of the year. I don't know what to make of that. All right, so we got when I was on your show earlier at the end of January, I alerted the folks that on the 4th of February, that was a Monday after the close of the markets, there would be a new moon in Aquarius. That's at apogee. That's kind of the opposite point of where we're at now. And that also is a lunar syzygy or supermoon. So we're going to review those markets, and as we go, since we're right on top of another lunar window here, in most cases, I'll probably also show you the how things are looking. So, for example, I was emphasizing a month ago, well, I guess 3 weeks ago, that the new moon in Aquarius would our top market to look at. Doesn't mean we're going to get a trade. Doesn't mean it's going to be right. The astrological indications are you should put that at the top of your shopping list. So let's go look at copper. Copper is associated with Aquarius. There we go. The red arrow shows you that I was about 1 to 2 days early on that top there. So I got a red arrow there to show that was a miss. My parameters are like 1 day. Got to hit it within one trading day or it's wrong. Silver had a little bump up here. I know it's tiny. You'd probably have to blow it up to see it, but there was a small bump up here. So we had a small sell signal there, and that was successful. And silver did trend lower, and you had a chance to make some money. Okay. Remember, I'll recap the general principle: full moons and new moons. You look for a change in trend, and the usual suspects are your precious metals, your grains, and your financials tend to work well at the moons, right? By the way, if the folks don't remember, today is that was apogee. That's when the moon was at its farthest with the new moon. Today we have the full moon at perigee. If you're in the U.S., you'll have to wait till the night to go look at the full moon because it's occurring. The exact point is occurring during market hours. It's actually 10:54. Don't know that the market will turn right to the minute there, but it should have some bigger picture effect. And I think that we're, as you will see here with these markets, these charts, in many cases, we're at near an extreme on these trading channels, So anyway, silver has made it, it stopped there, traded down. Now we're kind of back to the top of its trading channel. So we'd be looking for some sort of, probably some sort of top here about now. If you break out over since then.
Hey, Norm, repeat. You said that the new moon is occurring right, or full moon is right during market hours today at 10 something?
10:54 a.m. Eastern time.
Okay, that sounds good. Continue, please.
Sure. And there's your silver. Okay, let's go look at the gold. The gold was a miss. We didn't really get we were looking for some sort of a bump or extreme, and it just kind of went down, in a straight line there. And so that was, we wouldn't, I don't even know if we would have done anything there, but I had to mark it as a miss because it didn't follow our rules. Corn, the grains were much friendlier to the moon last time around. And here's your corn, had a nice rally, a bump up into the new moon. And now we've trended down, and now we're getting close to the bottom of the trading channel there. Looks like about the 372 area on March corn there. Might be a nice level if it can push it down here today, a few pennies. That might be a good entry point, and you'd have a relatively low risk because if you go much more than a few cents under that, you're going to be stopping, stop. You're going to get out, your stop loss. You don't need to risk more than a few cents on that trade, Here's your beans, kind of doing roughly the same thing. They had a little bump up there right into the moon, and then down, down, down we came, and now we're kind of in the middle of the short-term trading channel there on the beans. So we'd like to see the beans get either move up here. It's kind of in the middle of this channel. So we'd like to see the beans either get to the top of that channel or the bottom of the channel here in the next 1 to 2 days. Other big thing coming up, I'll get to that in a minute because that's kind of a future thing. Here's the wheat was probably the friendliest of all. It had a really nice rally right to the top of the, right to the moon there, and made a nice spike top there, and then sharply lower into today. And there we go. We're approaching the $5 level there, and that looks like a possible nice support level for wheat. If we can push the wheat down just a couple of pennies, it looks like a nice area there to possibly buy wheat. Here's your S&P. S&P had a nice top on the last new moon there, and we dropped about 2% from that top, and then we've been rallying up, as you know, and now we're into the full moon window. We also have a big thing happening tomorrow. This is kind of a 2-day window with Mercury is going to reach its zero maximum north. That's one of my top things when the planets get to zero latitude. So this is like a huge, 2-day window with the moon and Mercury having big cycles. So
we got to pay a few bills, Norm. We'll be right back, and we have one question for one of our listeners. So come right back, please.
Okay.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, we're back with Norm Winsky of AstroTrans. I'll hold the question until a little later. So you want to continue, Norm?
Yes, sir. Thank you. So we were looking at the S&P here, mentioned that the last new moon, we made a nice top there. We dropped 2%. That's about 55 handles roughly. And so that was a nice trade there. And now we're back up to the top of the channel here. S&P has a propensity, as you know, Larry, to retrace about 76 retracements. There seems to be a prominent thing with the S&P. I was hoping, and I know we don't use that word. Hope is a four-letter word for traders. And so, but I was kind of hoping we get a little more rally here, maybe get to 28.10, but that doesn't, it's a 2-day window. It's a possibility, but doesn't look very probable right now. Unless we could turn around and have a huge rally today, it's probably not going to happen. But anyway, we get to the top of this channel here. Maybe it'd be nice if we got just a little bit higher and then roll over. And I'm with you on that. It looks like we're probably due for make some sort of a trading top here, All right, the bonds made a nice low there back on the new moon on the 5th of February. And then they kind of traded into a narrowing range here, and they're in the kind of the middle of the range. So there's not much we can tell about the bonds right now. They're kind of hiding out there, All right, the dollar, the currencies were not so friendly. Just don't disregard this, though, for your currency traders. Because this stuff works a high percentage time. It just happens that sometimes they didn't work, Is there some noise going on there, Larry, or something?
I don't think so.
I hear funny noises. I don't know.
I don't hear any noises at all. Sorry.
All right. Anyway, so here we go. The dollar missed. So that was a miss. And then if the dollar misses, you're probably going to miss on the euro. But, and we're pulling back here. We broke the up channel. So probably the most likely scenario. And, we'll have to wait and see here in the next day or so. But it looks like the dollar may be pulling back into the full moon here and setting up for a rally, but I'd be very careful with that. Same thing with the euros. Possibly it broke its downtrend, doing the opposite, and so we have to keep an eye on those. All right, here's the every now and then you would talk about the Bradley model. I have my version. Here's how that all came out last month for January, and there's your solar. We had a solar eclipse in early January. This was beautiful. We had a nice top on Friday the 18th. With the full moon lunar eclipse there, and also at perigee back then, and we dropped 2.1%, about 55 handles roughly, for a nice trade there, and I think there's a pretty good correlation there with my blue line, which I did couple weeks in advance, and the black bars, which are the S&P 10-minute bars, which I overlaid after the fact. Okay, so let's look ahead now. I also do fractals. If you folks want to learn how to do fractals, and they're very simple. They're all my stuff. All my stuff is on a grade school level, or I couldn't do it, you know. So anyway, I could teach a 10-year-old to do this in 10 minutes, and they're amazing. Look, here's coffee. I've been showing a few of these in the past several weeks, past couple shows that you've had me on, Larry, because it's that time of the year again when I roll out the next year's fractal forecast. So let's see if they worked last year. There's coffee. That was pretty nice. Helped you catch that nice turn right there and turn right there and so forth. So that's pretty good. I do these for 27 different markets. There's cotton. It's not too bad. You see that? Here's gold. I know everybody loves gold. That could help you catch a nice turn right there in the October period. And here's your the currencies are probably the best group of all last year for the fractals. There's your Aussie dollar. That's pretty amazing. Okay. And there's your euro. That also worked well. And here's your yen. The yen has been one of my best ones, and every year it works well. So there we go. All right. Now we're going to talk about what's coming up here the next 2 days, now and tomorrow. We got the full moon, and this full moon is in Virgo. That is a strong indication. Keep your eye on the grains, especially soybeans. And then we have corn. We have your foreign currencies, gold, OJ, oil, OJ, silver, soybeans, stocks, T-bonds, and U.S. dollar. There's your shopping list for the full moon. And here's Mercury at 0 north latitude. That's a strong indication. The change in trend for the grains and the stock market. And so there's your corn with an emphasis on soybeans, stocks, and wheat. So there's your shopping list for the next 2 days. Should be some big action here in the next 2 days. All right, and here's how we get. Here's how you can learn more about this. Contact me, Norm. I got about 50 years experience. I'm a bit junior to Larry, but we're coming up the rear there in the dinosaur race there, Larry. And so, I was on the started studying when I was a teen. I just turned 68, and so that's I got over 50 years experience. I did 12 years as a Chicago floor trader, and so I got a little bit of experience and been studying this astro stuff since the early 70s. Used it to invest while I was in college and made enough money to be able to buy a membership on the fledgling CBOE in 1975, and I became a market maker there for 12 years. And I got to be an old man, in my 30s, and I decided to move on then, All right, so by the way, I sold all my seats just ahead of the crisis of 87, All right, there we go. So get a hold of me right away, and we'll get you lined up here. I do cycle the classes usually the first week of each month, and so we're taking reservations now for March. So get a hold of me right away, and we'll get you all set up so you can take a 6-hour class, get you a veritable college education, but all at a grade school level. It's simple. You don't have to be smarter than a 5th grader. And I'm going to teach you some advanced forecasting models on how I do all this. And you're going to get my letter, usually a 40-page letter. Going to teach you how to day trade this stuff. That's been going really well for my people. And the swing trading's been going really well. So give me a call. They're here in sunny Naples. I'm at 239-594-3939. Or there's my email, Nwinsky at embark with a Q there, mail.com. Or you can call me on Skype at Norm.Winsky.
Norm, we have a question from one of our listeners. Do you have a second?
Sure.
What is the power difference between Mercury going retrograde or direct and Mercury at 0 degrees?
I give those about equal power.
Okay.
On the totem pole of that category of stuff, I would say of all the station points, Mercury going direct is probably the weakest.
Okay, that sounds good.
Okay, that's just my estimate, But the station, they're in the same category of power, in my opinion. That's called station points when planets stop to turn direct or retrograde. That's called the station point, and that's in the same level of power as when the planets get to 0 latitude. In case the folks don't remember, the planets go around the sun, they go round and around like horses on a carousel, and that means they also go up and down. They oscillate up and down as they go around and around. So when they get to that midpoint of the up and down, that's zero latitude, and that seems to be an important energy point.
It makes sense. Well, we want to thank you for being on our show today. We'll have you on again probably closer to when we have another new moon, which will be coming up here in 14 days. Maybe you'll be kind enough to come on again.
I would love to do that. Larry, I am your moon man, and I appreciate you allowing me to come on,
Okay, Norm, listen.
They used to call me that on the trading floor. They called me the moon man.
I won't go into that subject matter, but may God bless. Thanks a lot for joining us, Norm.
Thanks.
You bet.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've posted a chart that's been on the internet that people have been sending me, and I'm not sure where it comes from or what it means. It's basically supposedly from Tom DeMark, and it's showing the correlation between 1929 and where we are now, and I'm not sure whether it's right or not. There's a problem with the scale on the right side. As you noticed that it's around 17,000 in the Dow, and we're 1,900 points higher than that. So I don't know if that's the case. The patterns look the same. There's no question about that. But whether it comes from Tom DeMark or not, I'm not sure. I received it from 2 different sources, and I'm not sure whether it is from Tom, but he does, exemplary work. So pay attention to it if, in fact, this does start to pop up, because it's been a long time, 32 years since we've had any type of we've had a flash crash and we had a couple of bear markets, but we've not had what we call a real crash where prices drop 20 or 30%, in a matter of, a few days or even a week or so. So maybe that'll happen. Maybe it won't. I don't know. There's some signs that that's a possibility, but that's really not whether it's going to mean anything or not. The one thing that I do want to bring to your attention was in the Dow Jones Transportation, of course, and that is that the current pattern is not as shown in I believe that, Mr. Z. That's why I brought it to your attention, folks, that it's a real suspect chart. So I didn't, I wanted to bring it to your attention, the fact that it was suspect, and that's why. Well, the reason why, Mr. Z, is I've gotten 6 emails from people saying, is this any good? And the only way I can communicate to them really is because I have, I'm not a very good typist, and my suggestion to each of the persons was, contact Tom DeMark, so I won't do that anymore. So let's move on to this. This is something that I do know, and that is the Dow Jones Transportations here. You'll see here is a 135 pattern stopping at the 78% level here on Friday. Whether that's going to mean much or not, we'll see. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.